Good evening, everyone. It's time for today's tax talk. I'm your host. I'm attorney Stephen Leahy. It is the 17th day of November, the year of our Lord, 2021. We're going to talk about the Cash App crackdown. It's coming. I warned people about this. It's coming. So that's what we're going to talk about today. Won't you join us? It is the Cash App crackdown. This was the bank reporting that we talked about a lot over the last couple of months. That did not yet pass. I hope it never does pass. But what did pass is the Cash App. This happened second day in a row. This happened to me. It is the 17th. Don't know why that happened again. Have to figure that out. Okay, so what's going on though is the bank reporting kind of didn't go anywhere. Everybody found out about it, and they had people objected, rightfully so. I object. I think it's a violation of your privacy. Again, many people, when they found out about it, objected, and then it was taken out of the bill. And whether it will be put into this new reconciliation bill, if the new reconciliation bill ever gets passed, is another matter. And I had a story yesterday, but yesterday was Crypto Tuesday, so we didn't talk about. But there's a story about the Congressional Budget Office and their pricing the new reconciliation bill, and that's going to take some time. And many of the Democrats in Congress and the Republicans they want a valuation. What is it going to cost? And so far, it's a lot more. We got a little bit of a story about that too. Here in the stack of stuff, as our friend Rush Limbaugh used to say, the stack of stuff. But we're going to talk a little bit about this. Let me give you a little background here. This Cash App reporting, again, the bank reporting didn't go anywhere. But in the American Rescue Plan, which was passed in March, again, it was urgent, and so they didn't really debate it. There was no real hearings on it. What was in the bill was never really revealed, so nobody really objected. And what turned out is that they have this Cash App reporting in that bill, and so that's passed. So all these things you hear about the bank reporting, and again, you say, "Whoa, we dodged a bullet on that one." Well, here's a bullet we didn't dodge, and it's the Cash App reporting. And so the Venmo, Cash App, and other payment apps to report payments of $600 or more. Okay. So now, people say, well, this doesn't have any effect at all. So I'm going to read the story because I think it's important. And it's not about the tax. So I have something here and I want to show it to you. And that's the 16th Amendment to the Constitution. And here it is. Maybe I can blow it up a little bit. And you can see it a little bit better. Okay, did it blow up? Yes. Okay, so the 16th Amendment to the Constitution is what allowed Congress to start an income tax. And the 16th Amendment says, the Congress shall have power to lay and collect taxes on incomes. And here's the key part. From whatever source derived. I'm going to repeat that. From whatever source derived, without apportionment among the several states and without regard to any census or enumeration, because that's what the Constitution originally required. They didn't want one state to pay more than the other states. It was all an equal partnership. But if they did an income tax, well, they couldn't do that because some states have more people than others and they collect more money. And so they needed a constitutional amendment. And so that's what the 16th Amendment does. But I wanted to point out because it says from whatever source. Right, and so this doesn't change that, right? If you ever got money from whatever, even if you got it on the Cash App, whatever you got the money from, you had to pay taxes on it. You had to report it. Now the implication or what Congress was saying is, you're not paying it. You're lying. You're cheating. Too many people are cheaters, and they're not telling us what's on their what they sell on those Venmo and everything, these cases. So we're going to require that you tell us, just like the bank reporting. And I think if more people knew about this, they wouldn't have agreed to it. But nobody knew about it, and so it passed. Maybe we should try to get up in arms about this. And maybe somebody will, but they won't do it till next year after they have to report it, because it doesn't begin until until January of this year. So you won't get it till next year. Okay. And if you receive $600 or more payments in total for goods and services through a third-party payment network such as Venmo, Cash App, Zelle, these payments will now be reported to the IRS. The new rule results from the American Rescue Plan signed into law in March, and will mainly impact business owners using third-party payment network providers. The IRS is cracking down on payments received through apps such as Cash App, Zelle, and PayPal to ensure those using the third-party payment networks are paying their fair share in taxes. Again, even if I'm running a business and someone pays me on Zelle or PayPal, I still have to report that income. I always had to report that income. So again, the IRS is saying, well, you've been cheating. Not enough people are telling us. So now we're going to make you tell us. We think everybody's cheating. We're going to have to, I want you to show me. Prove it to me. Previously, the IRS only required third-party payment networks to report payments that met both of the following requirements. This is important. Gross payments that exceed $20,000, and then here's the key word, and more than 200 transactions within the current year. $20,000 and 200 transactions. So that was pretty safe that you were probably doing some transactions on eBay or something. That's really what this was about. In 2011, they passed this bill, and that's what it was about. It was about trying to catch people selling stuff. Now, a lot of times you sell stuff on eBay. If I'm selling my personal belongings, that's not a taxable event, right? Let's talk. I think they talk a little bit about that in this article. Beginning January 1st, 2022, third-party payment networks will be required to send users Form 1099-K for transactions made by mail or electronically. This means you don't have to worry just yet. The new tax reporting requirement will impact your 2022 tax return filed in 2023. So that's what I was just telling you. It's not till next year. Here's how the new tax reporting will work. Starting January 1st, you will receive a 1099-K in 2022. From third-party network providers for income received through electronic payments, to like forms of payment by January 31st of the following year. In the near future, companies like PayPal, Zelle, Cash App may request additional information from you to properly report your transactions on your additional Form 1099-K. You may be asked to provide your employer identification number, individual tax identification number, or social security number if the information is not already on file. Your Form 1099-K will include payments from credit cards and online payments. You are required to report any income listed on your Form 1099-K from your taxable transactions on your income tax return. And so people might be saying, hey, wait a minute, Attorney Leahy, I report that stuff anyway. And Attorney Leahy, I keep great records. Well, you're one of the few. Most people don't keep good records, and they don't keep good records on here because they didn't have to. If I got a payment, I put it on in my invoice, I sent it to my client, boom, I accounted for it. But now if I'm using that Cash App, maybe I have some sales, but maybe I go out to dinner with a friend and they repay me. Maybe we go out to movie and they repay me. And it totals more than $600, right? Now that's going to appear on there. For Venmo, Cash App, and other users, this may sound like a new tax, but it's merely a tax reporting change. Oh, don't worry about it. It's not a new tax. What are you complaining about? It's not a new tax. And as I mentioned, it isn't a new tax. I had to pay tax on that anyway. But here's the problem. Okay, it's the reporting. First, it's the invasion of privacy, right? So they're going to look at all my transactions. Oh, you went to dinner with them. You went to dinner with here. You went to this event. You went to here. And they'll see all that. And then you'll have to back it all out, okay? Some examples of non-taxable income are money received from a friend as reimbursement, money received from a roommate to pay their share of the rent, money received from a loved one as a gift, Also, if you receive money from selling a personal item at a loss, you're not required to report that amount on your tax return. For example, if you purchased a dress for $100 and you sold it for $50, the amount is not taxable. Can you prove you bought it for $100? You can prove. I know you sold it for $50. How much? Can you prove you bought it for $100? Oh, I don't have the receipt from that. How am I going to prove it? I don't know. That's a very good question. But while the new law does not create a new tax, you must keep good records of the taxable income received. Now, this is where I come in on this because, again, as a tax attorney, which I am, so many people come to see me. When someone comes to see me and they keep very good records and they know exactly how much miles they did and they keep a contemporaneous log and they do this and they do, I know they've been audited before because most people don't do this. Even though now we have apps that make it easier, it's still difficult and a pain in the rear. Okay, it just is. And most people don't do that. And as most people that hire me, I'll tell them they're very good at what they do. They're just not very good at keeping records. And most people aren't very good at keeping records. But now the onus is going to be on you to keep good records. Because if you don't keep good records, you're going to pay. And you're going to pay dearly. And you're going to pay taxes on it if you can't prove it. Like that dress I just mentioned. You sold it for $50. But IRS, I paid $100. When? Can you prove it? Oh, you don't have a receipt to prove it. Well, then it's $50. You got $50. Well, I had to pay something. It wasn't free. Was it? I don't know. They don't know. You don't have any proof. This is the way they audit people. Now, is it going to be that way on this? I assume that's the way they do it now. When they audit you, you get a 1099-C. You get a 1099. They used to call it miscellaneous. Then it went to another one. You know, well, is this taxable or not taxable? You have to prove it's not taxable. The IRS assumes it's taxable. That's when they get the 1099-K. They'll say this is all taxable. So now you're going to have to show the IRS what is not taxable. You should maintain records such as bank statements, receipts, invoices, and other financial documents to reflect taxable income. You consider saving your records either in electronic form or manually. If you are a business owner, it is a good idea to set up a third-party network platform such as Cash App, Zelle, Venmo separately from your business and personal transactions. This way, you can easily track business transactions. Also, keeping good records can be beneficial to prove both taxable and non-taxable income sources if the IRS audits your tax return. And this is what they'll do. This is how they audit you now. They call it a correspondence audit. And a correspondence audit is not when someone comes to you. They just match, right? Here's what the 1099-K said. Here's what your tax return said. They don't match. Prove it. Why? Why don't they match? Now the onus is on you. You got to prove why it doesn't match. This is what the problem is. And this is what people, it doesn't change anything. It changes a lot of things. It doesn't change the amount that you have to be taxed on. You always had to pay tax on that. Again, but now it's going to affect affect your reporting and this is what the banks were so this is why the banks were so against this, right? Because it put the reporting requirement and the cost of that reporting requirement on the banks, and they didn't want that reporting requirement on them. It increases their expenses, and when they increase those expenses, either they're going to make less money or they're going to charge more. Which one do you think it's going to be? We know that they're going to charge you more. They have to. They're not going to make less money, and this is not a small thing, right? It's not for the banks. It wouldn't be a small thing for people, individuals. This is not going to be a small matter for many people. If you're doing any business, it does make sense to separate them, and you should do that anyway. But what if I don't? What if I don't have any business? Well, how are they going to know? They're going to send you a 10K. Well, I'm not really doing any business on my Zelle, or aren't you? Can you prove that? What are these transactions? Well, this was a gift from my grandmother. Oh, is that right? Can you prove it? Again, how does that work? My grandmother gives me $1,000. Now I'm going to get a 1099-K from Venmo. Wait, Grandma, I have to prove it now. Oh, but it's not a commercial transaction. Oh, it won't make a difference. It will make a difference. Okay, so again, this is what the problem is. And there's a couple more articles here. New IRS rules for Cash App transactions taking effect in 2022. But again, you won't have to account for this. You won't get that 1099K until next January 2023. So they'll start with 2022, but you won't get the 1099K until next year in 2023. Again, you'll out of sight. So nobody will be up in arms until then. Then there will be a problem. Right now, it won't be a problem because you won't have to do it. It'll have zero effect on you. IRS is cracking down on goods and services transactions through apps but again, these goods and services are already taxable. And if I'm an honest person, I've already put it on my table. Well, then what's the difference, Attorney Leahy? Well, now the cost and the problem is on me. And I'm considered a liar and a cheat until I prove otherwise. And again, I think that's a violation of my rights under the Constitution. My own opinion. Right? I don't and I think the courts are coming around my way of thinking that too. Here's the 16th Amendment again. And I wanted to also talk about this article here. Biden's reliance on IRS enforcement to pay $1.85 trillion bill hits a snag. I've been saying this all along. They keep telling us that I've been talking, maybe you've heard me say this, but there's the three boogeymen that I've been talking about. The tax gap, the wealthy, and crypto, right? And so the tax gap is the difference between what the IRS collects and what the IRS says they should collect. They've exaggerated that number. I've heard it was 250 billion, 300, because remember, they don't know what that number is, right? It's all guesswork because they don't know exactly what that number is. Now you say, well, it's based on this and our audits and whatever. But I think it's exaggerated. It's always been exaggerated. But say they were saying it's 250 billion, $300 billion a year. Earlier this year, they started reporting it was $1 trillion a year. Oh, the crypto just skyrocketed. It's $1 trillion a year. And so they were hoping to get, and then minimum they were going to collect, right? They want to put $80 billion more into the IRS because they believe that they'll collect a lot more money that way. And that's how it's going to be paid for this. And that's why they keep telling us, and Joe Biden keeps standing up before us and telling us, this is zero. It will cost us nothing. But of course it's going to cost. Even if they got the money that they say they're going to get, it still costs us money. We're going to collect it. As they said, every election cycle, they tell us that they're going to get rid of the waste and the fraud. And if they do that, then they won't have to raise our taxes. But they never do that. And so they raise our taxes because they're going to spend it. We're going to save it, so we're going to spend it today. We'll save it tomorrow. We'll spend it today. But they never save it. So they spend it today, and then we pay for it tomorrow with more taxes. That's just the way it works. And that's the way this works. And that's what's happening now. So now with the bank reporting gone and other measures that they wanted to put in gone, they're not going to collect as much money. And so now how are they going to pay for everything? President Biden's pledge to fully pay for his $1.85 trillion social policy and climate spending package depends on large part on having to beefed up Internal Revenue Service, crack down on tax evaders. Again, we're all tax evaders, we're all liars, we're all cheats, and they're gonna hold us to account. Which I thought I restarted that. Which the White House says will raise hundreds of billions of dollars in revenue. But the director of nonpartisan Congressional Budget Office said on Monday that the IRS proposal would yield far less than the White House was counting on to pay the bill. About $120 billion over a decade versus $400 billion that the administration is counting on. And actually, they told us it was going to be $1 trillion. So double this. This is what they told us. What they've been telling us. I can find many articles where they told us this. How much time am I in? Okay, I'm at 19 minutes. So I don't want to go into this, but because this will just get me going, and I'll start ranting about it because again, it's been a lie all along. It's a lie today. It was a lie yesterday. It'll be a lie tomorrow. It was never going to be zero. It was always going to cost us money. So anyway, I wanted to talk about the cash apps again because it's coming, and this is one of the most common questions that I get about what's going on with taxes. What's going on with the cash apps and bank statements. That was another one. So again, if you're fighting the IRS like I help people do, first I'm going to ask you to subscribe, like and subscribe. It's important that you like and subscribe. We can't, I need to get this information out to people. And the only way I can do that is if you like and subscribe. Share, like, and subscribe. Okay, that's get around this the block that you'll have by YouTube by sharing. Okay, so thank you so much. If you view this, please share and subscribe and put it in the comments, and I'll be happy to comment on it. And then finally, I'm going to tell you to fight the IRS. The first step, number one step, first thing you do when you're fighting the IRS, get a copy of my book. Deal with your IRS problem today. Deal with your IRS problem today. Go to freeirsbook.com. Freeirsbook.com. So thanks so much for joining us here today. I appreciate it. I know that this is. Everybody thinks tax is boring. Tax is not boring because it's the number one avenue for government, right? Every government action really involves taxes. How they're going to collect it or how they're going to spend it. And so that's why today's Tax Talks is so important, and why there's always vital information that you need to know. And that's what we talk about here on today's Tax Talk. So thanks so much for joining us here today. I appreciate it. Let me see if I can start this thing again. And I hope we see you again here tomorrow. Thanks again.